Welcome back. Earlier this hour, we spoke with the COO of Airbus at the Paris Air Show, where business does not quite have the same lift it used to. The same goes for the other side of the Atlantic, where U.S. airlines are suffering from higher jet fuel prices, fewer travelers, and smaller profits. For a closer look at the airline turbulence, Bloomberg's Andy Cinco and Monica Bertrand have been crunching the numbers. We also have with us one of the best airline stock pickers, according to the Wall Street Journal, Helene Becker of Jessup and Lamont Securities. We'll start with Andy, who's been tracking analyst estimates for the airlines. And Andy, it seems like a lot of red.
Mark, things have changed dramatically in just 6 months. You know, when we began the year, analysts came in and they were very optimistic that the airline industry would do better. You talk about a recovery in the economy, you talk about lower jet fuel prices. That sure look like two very good signs for the industry. But Mark, all that optimism is now faded to red. Take a look at the Bloomberg terminal in here and we'll show you what's happened to earnings estimates for the Amex airline industry, Amex index. Sorry, forgive me, Mark. Above the dotted line, it would have been a profit for this year. We were looking at almost $4 per share for this index. We're now, Mark, looking at a loss of almost $1 per share. The reasons why, Mark, are pretty straightforward, and there's threefold here. One is fuel prices, which are rebounding quite quickly, surging 25% year to date. Second of all, there's fewer people flying, obviously, Mark, and especially the lucrative business traveler, which Monica Bertrand will talk about in a second. And lastly, because fewer people are flying, you know, airlines are cutting prices across the board in some cases. And, Mark, that leads to lower revenue and, again, lower profits. And last but not least, Mark, you know, airlines, it would be too simple of me to just say that earnings are down. Look at how many planes they are mothballing in the desert trying to take capacity out of the system so they can raise prices. They are now up by about 29% year on year, according to Ascend Worldwide, which tracks the number of planes that have been parked in the desert. Let's get over to Monica Bertrand with more on what's happening with business traveler forecasts.
And Andy, basically, we are seeing another squeeze happening in the aviation industry. Airlines are being forced to slash fares, as you mentioned, by as much as 50% to fill those planes. The biggest drop in demand is being seen in what is called the money maker for airlines, those business class fares from places like New York to London, Zurich, and other global financial centers. A check of travel websites like bestfares.com, you can find a ticket from New York to Zurich for a little over $1,800, 51% cheaper than last year. Flights to London's Heathrow are down 56% to just under $2,000. And as one analyst put it, these business class fares could be the difference between profitability or not for airlines. Now, international business class travel is pivotal for U.S. carriers like Delta and AMR, the parent of American. According to the International Air Transport Association, carriers get as much as 25% of revenue from premium tickets on overseas flights. IATA says that worldwide industry losses may total $9 billion this year, twice as deep as the previous forecast. Checking on the stocks today, they are all lower, as you can see. Also, demand for that premium class service has declined after financial companies across the globe cut almost 188,000 jobs since the end of September. Mark?
Monica Bertrand joining us from the newsroom. For more on the outlook for airlines, let's turn to someone who's been named as one of the best stock pickers on the street for the airline industry, Helene Becker of Jessup and Lamont. She joins me here in the studio. Ms. Becker, welcome to Bloomberg News.
Thanks, Mark.
Talk to me about what's going on with the airlines going forward, especially during the summer travel season.
Well, we expect leisure travel to be fairly robust during the summer. As was just pointed out, airfares are coming down pretty dramatically, and one of the things the industry can definitely do is stimulate leisure demand. It's no doubt about it. But they cut fares and people will travel.
This is one of those things. It's been a tricky thing to get a handle on because we're talking about people who, because of the economic climate, have a tendency not to spend money. They're saving it for the essentials. They're saving it for food, travel to and from work. But you're saying, at least at this point, these are deals that even in these economic times, people can afford to spend some money on.
Well, exactly. You know, if people are still working, then they may have some vacation time that they've saved up. They're waiting longer to book their trips. That's definitely the case. But they're also flying. And we're also seeing another interesting phenomenon. people who are getting laid off are also taking trips before they start their job search. They figured they've worked long hours for a few years. Maybe they haven't had a chance for a vacation, so this is kind of their maybe one chance to get away. And the fares are so cheap, they almost feel like they have to go.
That's a very interesting dynamic because I guess, well, maybe they're seeing some of the economic signs, some of the internals starting to turn, and they think, well, maybe I'll get back in the job market sooner rather than later, so why not take the time off now?
Exactly.
If you get another job, you can't say, well, I'd like to wait 2 weeks. You just have to get right back in the job market. Helene Becker, if you wouldn't mind, stay with us. We're going to take a break. Ms. Becker will join us after the break to talk about the airline industry. Delta, Southwest, American, Continental, all falling today. Stay with us on Bloomberg News. We'll have more when we come back. Welcome back. We are joined once again by Helene Becker of Jessup and Lamont, taking a look at airline stocks. Ms. Becker, thanks for staying with us through the break. You say it's business travel that's going to continue to be down. The bigger margins are in business travel, but the airlines are adjusting to this decline. How?
Well, they're doing a lot of different things. One big one is removing capacity from the system. They've really tried to get ahead of that last summer when oil prices were racing towards $150 a barrel. They immediately started cutting prices because they couldn't, cutting capacity because they couldn't be profitable at that level. So they were a little ahead of the game when the travel demand started to affect them. And it started to affect the airline industry really in October of 2008. And that weakness has continued, especially in the business travel market. So the industry has really responded aggressively with lower fares, and they can stimulate demand for leisure travel still. We're still seeing 80% load factors. It's the business travel that they can't stimulate demand for, and so we're seeing more international capacity come out of the system.
Okay, and we talked during the break, we talked about oil prices. With the prices on the rise, airline prices inevitably will go up?
Well, they walk a very thin line. So yes, as oil prices go up, the industry will try to raise fares. In fact, almost every Thursday night for the past month or so, the industry has tried to put some fare increases in place only to have to roll them back, by Monday or Tuesday morning because demand slips. So they're really at a tough crossroads here with trying to raise fares to cover rising costs and then watching demand slip. So then having to cut demand, having to cut prices further to further stimulate demand. Are there any airlines that you see at a real financial risk right now? Well, there's really no airline that has a triggering event this year, with one or two exceptions. I mean, American Airlines has almost $2 billion of debt due this year. They've paid half of it back. We think they'll be in the market to raise capital sometime this summer. And please forgive me, could you define triggering event? Oh, yes. Triggering event is some event that would cause a Chapter 11 filing. Okay. And so the only airline that really has an event like that is American, and that's $2 billion of debt repayments due in 2009, and really a substantial amount of aircraft due this year. Most of the aircraft is financed for 2009. They're working on 2010 financings now. But the real issue for them is, finding the money to pay back all that debt. Helene Becker, an analyst at Jessup and Lamont, talking airlines. Ms. Becker, thanks. I appreciate it. My pleasure.